Welcome back to my channel. This is regulatory platform where we discuss issues that affect the insurance industry in Nigeria and elsewhere. In case you're joining us for the very first time, my name is Dr. Sam Onyeka. You're welcome to my channel. I will please request you to subscribe to this channel and also remember to turn on your notification bell so that when we upload new video, you will see them. Thank you. During the last episode, we discussed the composition of the insurance industry and we identified the various stakeholders, including the insurers, the insured, the intermediaries, the regulator, and various representative associations. The video is on the description box. You find the link there in case you want to watch it. Now today we are going to discuss something that I consider very important, and that is the preconditions for effective insurance supervision. Remember, during the first episode we defined regulation and we defined it to include supervision. And we said that the regulation entails the rules, while supervision is the actual monitoring to ensure that these rules are being respected. So today we are going to be looking at effective insurance supervision, the preconditions for effective insurance supervision. I'd like to tell you that these preconditions have been identified and listed by the International Association of Insurance Supervisors, which is the global standard setters for insurance supervision. And you can find it in the latest edition of the Insurance Core Principles and Common Framework published in 2019 at page 4. You can go to the website of the International Association of Insurance Supervisors, IAIS.org. You will find the document there. All right. Now, how do we go? I am going to be brief as much as possible, and I'm going to try to relate these conditions or preconditions to the insurance sector in Nigeria. And we're going to look at what we have on the ground and what we need to have on the ground. I hope that both the regulator and policy makers in the financial sector will take away something from this video. Thank you. Now, let's go. There are about 5 of them, and the first one is sound and sustainable macroeconomic and financial sector policies. When we talk about macroeconomic policies, we are looking at those policies that affect the economy as a whole. They affect the economy as a whole and they relate to the financial sector, which insurance is one. Now, these macroeconomic policies include fiscal policies, monetary policies, and exchange rate policies. Now, remember that policies are statements of what the government will do or what is permissible, what government will allow within the system. And so policies drive regulation, drive even legislation. So this time around, we are going to be looking at how these macroeconomic policies affect insurance supervision and even insurance sector as a whole. Now, let's go. In terms of fiscal policies, we are looking at budgeting and we are looking at taxation. In terms of monetary policies, we will be discussing inflation and interest rates, and then we also talk about the exchange rate. So I'm going to summarize how these are interplayed in terms of insurance industry and even supervision. Now, quickly, with respect to fiscal policy, first, in terms of budgeting, insurance is a product that is purchased by government and individuals. And like you know, in this economy today, government appears to be the highest spender. And so everybody's lobbying, everybody's trying to get the government to buy products including insurance. And interestingly, some of the products, insurance products we have today have been made compulsory by law by reference to the existing Insurance Act. So government is compelled to buy in some respects, and in some respect will buy naturally. But howsoever, government don't spend money without budgeting. And so we're interested in budgeting in terms of the timing of the budget and actual implementation of the budget. If the budget is ill-timed, it means there may be no insurance purchase in that year. This is a fact. And also, even when there is a budget, if the budget is not properly implemented, there will be no funds released for buying insurance. And so, insurance is very crucial for this economy. And it's important that government policy recognizes it. And so, insurance is put as a key requirement in the budget. And also, the budget is implemented. This is important. Now, with respect to taxation, how government tax the insurance industry is critical to the insurance supervision. Remember that supervision is about ensuring that the laws and the rules are respected. In terms of solvency, for example, you make rules that ensure that insurance company remains solvent. But if there are issues that make it difficult for these solvency rules to be applied strongly, then it will be difficult for the insurance industry. Now, how does the issue of taxation come in here? Taxation comes in here because we have seen from experience that up until 2019, the insurance industry was taxed, twice. The industry pays tax on gross premium, which is about 0.5%. And then they also are made to pay tax again with respect to life insurance investment funds. That's a double taxation, and it was lopsided. But happily, by reference to the last amendment of the Finance Act, we saw that there is a change now. For example, by Section 5, Subsection 6 of the Company Income Tax Act, taxation of investment now is no longer of investment in policyholders' money. You are no longer taxing insurance fund, but you are taxing profit from investment of shareholders' fund. This is important, and I believe that with time, other gray areas relating to taxation will be resolved, and this will make supervision smoother. All right, now with respect to monetary policies, we are looking at how the central bank control money supply, and this is reference to inflation control and also interest rate. Now, remember, with respect to inflation, when you have policy, but especially for long-term policies, life insurance, if you like, it takes a long time for the investment to be realized. And so if between the time the policy was purchased and the time of realizing it, inflation becomes too high, then it won't have made any sense to buy into the product at all. So inflation control is very critical for effective insurance provision. Now, what about interest rates? Remember again, like I said, insurance, long-term insurance or life insurance, if you like, has investment linked to them. Most of the products are investment links, and so they behave like banking products. So if the exchange rate is too low, nobody will want to invest. And if it's too high, then insurance companies will find it unprofitable to trade in those products. So government, in making financial sector policies and macroeconomic policies, will need to put this into consideration as it relates to monetary policy. Now, the last one I want to touch on this point before I leave it is exchange rate policy. Remember that insurance is an international product. Insurance have international products, and you buy into it from anywhere, especially those who deal on reinsurance. So the exchange rate may be 200 naira to $1 when insurance is entered into, the contract is entered into. And when payment is going to be made, exchange rate will have become 550, 600 naira. So it will put pressure on the investment of the insurer and can destroy the business. It's important that government monitors exchange rates if it wants to grow insurance industry and also help insurance supervision. Okay, so because of time, I'm going to leave this point now, and I'm going to go to the next point, which is well-developed public infrastructure. Well-developed public infrastructure. By well-developed public infrastructure, we are looking at those systems, those structures that are in place to enable insurance supervision. And what are these structures? One, we are looking at the body of laws, financial laws, for example, especially with respect to foreign direct investment. We are looking at availability of human resources. For example, lawyers, accountants, actuaries who are vast in insurance industry. We may have a lot of lawyers in Nigeria, no doubt, but we have very few lawyers who are specialized with respect to insurance laws. And we also are battling to have more accountants who can actually work with respect to insurance accounting. But the worst is with respect to actuaries, we don't have many actuaries. The market is still looking for more actuaries. And I understand that the regulator, National Insurance Commission, has begun a process to ensure that over time we will have more actuaries in the market. I think that is a good development, and I hope they follow it through. And then apart from that, we must also have a system of financial reporting that commands international respect. For example, we have implemented in Nigeria the International Financial Reporting Standards. I think that's okay, and the insurance industry have also implemented it. So it enables effective insurance supervision in terms of public infrastructure. And then we also need basic socioeconomic statistics. The Commission, as regulator, should have access to basic statistics for purposes of supervision. That's important. There may be a number of other aspects of this public infrastructure, but I'm going to limit it to a few because of time. But before I leave this point, let me also talk about systems for settlement of dispute and independence of judiciary in terms of litigation. Now, there is need to have a platform where resolution of disputes will be possible. And I'm talking about dispute relating to quantum, where there's a disagreement, for example, as to what is going to be paid. The insurer has offered 5 million, and the insured said, no, it's 20 million. So somebody will need to look at it, somebody who has the understanding of the industry, experts, and be able to resolve what actually should be paid. To that extent, I'm recommending alternative dispute resolution methods, ADR, which is highly developed in this country, and I'm inviting the insurance industry to key into it. Of course, most insurance policies will tell you that when you have issues relating to quantum, you need to go to arbitration first. All right, then if the matter goes to court at all, then there is need for speedy resolution. The court should be independent enough and fair enough. Fairness here includes timely disposition of matters that come before it, especially insurance matters. And of course, it is said that justice delayed is justice denied. We have experience in Nigeria where simple matters that come to court may stay 2 years, 3 years, and some drag between 10 years and 20 years. That will not help insurance regulation and supervision, because insurance remains one of the most litigated subject matter all over the world. And so there is need for prompt settlement of disputes, whether it goes to court or whether we resort to alternative dispute resolution. All right, so I will now talk about the third one. The third one now is effective market discipline in the financial market. The emphasis is financial market. So we are looking at discipline. How do we guarantee this discipline? We are looking at corporate governance rules, and we are looking at risk management framework. Now, it is important that we understand that you need to have a system that enables the company to internalize corporate governance and make it become a culture. True to speak, it's better to groom people than to manage complications that will arise if people are not groomed. And so if you have a system where everybody is disciplined, where corporate governance is respected, the financial documents that will emanate from such a system will be near accurate. And that is what it should be. But where you have a corrupt system, no matter how you make laws, no matter how you try to put sanctions, you will still see people breaking the laws. People will still forge papers. And that will make regulators to begin to verify instead of carrying out actual regulation and supervision. Then they will begin turn to verifiers of documents, which is not the best. So there is need for a system of corporate governance that will enable companies to self-regulate themselves in terms of what they put out to the public, especially with respect to financial reporting. All right. Now, the other one is risk management. We are looking at how the company manage their risk. The company should be able to have strong framework for managing risk. And we are particular about capital, because capital can be filtered easily. And if care is not taken, you find a situation where companies begin to collapse, and this will affect the interest of policyholders. So it is important to have a system that enables the company to effectively manage their capital. Of course, the IAIS requires, in terms of ICP 8, that each company must have requirements in terms of risk management for purposes of control, as a control system. Part of control system, yes. But it is also required in ICP 16 that companies should have risk management framework for purposes of capital adequacy. So we are looking at how companies can guarantee a measure of safety for the funds with which they do business. So in terms of market discipline, we are looking at two key things in corporate governance and risk management, if you like. Okay, now number 4, we are looking at mechanisms for guaranteeing a measure of protection for policyholders. Here, policyholders' protection is a critical aspect of the job of the regulator. In particular, Section 7 of the National Insurance Commission Act 1997 gives NICOM the responsibility for protection of the policyholders. But the question is, how far can you go in this protection? The law is there, but what measures, what structures, what institutional framework do you have to guarantee a measure of protection for policyholders? So it's important, for example, with respect to insolvency, where a company becomes insolvent and cannot remedy the insolvency and needed to be liquidated, there is need for a procedure or arrangement that ensures that all policyholders involved will get some payment in relation to their claims. Experience have shown that frequently many people complain that they didn't get anything or they didn't get enough. I think the NICOM has a liquidation department and is becoming stronger by the day, and we hope that this will be resolved soon. All right, so we also are looking at having a strong market conduct framework that will guarantee protection for policyholders in terms of product development to ensure that these products meet the test of the public, and that also in terms of their distribution, that the agents do not force the products on the policyholders, which products do not add any value to them. This is important. There may be other areas, but we can concentrate on these two for this purpose. All right, the last one I want to touch now is efficient financial markets. Efficient financial markets. We are looking at opportunities for short-term and long-term investments in the financial markets. Insurance companies collect premium with respect to long-term policies, life insurance. They invest it and they hope to earn some profit or some returns out of it over time. So if they have this fund and there are no opportunity for long-term investment, then it makes rubbish the business. So there is need for the financial market to be efficient in terms of provision for long-term and short-term investment opportunities. So thank you for being on this channel today, and we hope to receive you back to this channel during the next episode. Meanwhile, my name is Dr. Sam Onyeka, and ensure that you have subscribed to this channel. Thank you. See you next. Bye.